You could do 450, I would have proposed 450.
That's $450 million, and that's Governor Brad Little commenting last week on the difference between what he believes is a fair and manageable tax cut. During his State of the State, the governor proposed tax relief of $100 million. And so far this session, Idaho lawmakers have proposed more than $450 million. The first chunk of which totals more than $250 million and just cleared the legislature. House Bill 40 would lower the state's income tax rate, expand military pension exemptions, and eliminate taxes on precious metals. But as Aspen Shumpert learned, the proposal sparked spirited debate on the Senate floor as legislators weigh its potential economic impact.
This is the people's money. It's taxpayer money. It's our money. And I think it should go back to the people.
The Idaho State House turned into a financial tug-of-war Tuesday as lawmakers wrestled over what would be the largest tax cut in Idaho history.
I would probably characterize it as also the most irresponsible.
House Bill 40 would trim Idaho's income tax rate from 5.6% down to 5.3%, which lands at about $240 million, staying in Idahoans' pockets.
Rather than them paying it to us, we're letting them choose with the $240 million where they're going to spend it. And as all of us have witnessed and understood in the last few years, when there's been stimulus dollars given to individuals, taxpayers, they spend that. And that stimulates the economy.
While the $240 million is the biggest piece of House Bill 40's $253 million tax relief package, the bill also sweetens the deal for military retirees by expanding pension exemptions, plus eliminating the capital gains tax on gold bullion.
If there is hard economic times coming for the people of Idaho, the best thing this body can do is cut as many taxes and fees for them as possible.
But the proposal isn't without its critics. Those opposed question whether the state can afford such a substantial revenue cut.
We have yet to set a state revenue projection amount, and that's problematic for me. In my opinion, we have no business voting for tax cuts until we know exactly what we have to spend.
Would you do that at home in your own budgets? Would you spend money not knowing what your revenue number is?
While those in favor of the bill say they aren't worried about concerns that this would take away too much of the state's revenue.
Idaho keeps a good amount in cash reserves. From what I understand, it's around $1.4 billion. That gives us a little bit of, I guess, comfort, the idea if there's a little bit of a shortfall.
Who should make the sacrifice? Will Idaho's citizens bear the brunt of that sacrifice, or should the government?
Opponents of the bill are calling this a Christmas tree bill, where lawmakers are trying to address a few things in one bill. Senator Janie Ward Engelking, who voted against the bill today, says she liked the veteran portion of the bill and wished it would have been on its own introduced. Now, this is just one of several tax relief bills that we are seeing this year, and the question poses, are they going to be able to do all of them? It sounds like not. We heard the governor's amount on what he's thinking,
right,
and these reliefs are adding up to be more of that.
True, and as regard to that Christmas tree bill, they proved last year they kind of disregard that, so who knows if that matters anymore at all. But when you talk about these other tax breaks, there are more, totaling about $476 million, because there's also this House Bill 93, which takes $50 million out of the revenue. So all of this is losses, and it costs money to run a state. That's what I think the argument was. Do we know if this tax bill, this one particular, goes through, what that would mean for, like, you and I?
Yeah, Senator Wintrow talked a little bit about that today, of this working class. What would they get back?
Okay.
And it was about $137, and she argued...
$137.
Yeah, and she argued, have you gone to the grocery store lately? That might take care of one trip of groceries. And so that was an argument we heard from her today.
$137 a year?
Yeah.
Okay. Thank you very much, Aspen.